Notwithstanding the recent softening of the diamond market and issues that have affected production at Cullinan and Finch, Petra remains in a strong position, being considerably more resilient through its strengthened balance sheet and the implementation of our operating model, together with ongoing cash generation. We reiterate our guidance and take comfort from the underlying fundamental market support as a result of the structural supply deficit, notwithstanding any short-term volatility relating to prevailing macroeconomic challenges. We have continued to improve our safety performance. The lost time injury frequency rate of 0.16 for the quarter improved by 48% from 0.31 last year and 51% from the previous quarter. Lost time injuries fell by 40% from last year and 50% from the previous quarter to 3. We will continue to make every effort to reduce the risk of harm in the workplace. The diamond market has softened from the recent highs earlier in the year, which we largely attribute to the ongoing COVID-related lockdowns in China. In particular, this has led to subdued demand and relative pricing pressure on the 0.75 carat to 5 carat size ranges in our first tender. We also confirmed today that we have extended the closing of our second sales tender for this financial year 2023 for a portion of our gem and near gem quality goods, particularly in the +1 to 5 carat size ranges, as a result of unusual market conditions with some build-up in inventory pre-Diwali. Pricing in other size categories are in line with expectations. Production for the quarter totaled 763.2 thousand carats, a 13% reduction from last year, but 2% above the previous quarter ended 30 June 2022. The reduction from last year largely reflects lower grades at Cullinan, as well as lower than expected tons mined at Finch. At Cullinan, as mentioned at the time of our Q4 22 results, we experienced a reduction in the grade recovered, resulting from a change in the ore makeup, given a higher proportion of kimberlite from the central and northeastern portion of the C-cut, that is both lower grade and higher density, as well as a higher proportion of cave waste. This is exacerbated by not yet having access to the fresher and higher grade ore in tunnels 36 and 41, as well as higher density tailings material and waste from the ongoing project development work, negatively affecting the DMS in the final recovery process. Various mitigation options are being considered, including expediting access to tunnels 36 and then tunnel 41, provided ground conditions are conducive to this. As a result, we now expect that production from Cullinan mine will be towards the lower end of our guidance range of 1.6 to 1.8 million carats for this financial year 2023. At Finch, as previously reported, we have largely mitigated the waste ingress and the implementation of enhanced drill, blast and draw controls, as well as certain changes made in the treatment plant, which led to a 9% improvement in run-of-mine grade to 45.4 carats per 100 tonnes from the previous quarter. However, tonnes treated fell 12% from the previous quarter to 572 million tonnes due to lower tunnel availability and a Section 54 stoppage notice. We expect to recoup some of these production losses during the remainder of the year, with Finch's production now towards the lower end of our guidance range of 1.3 to 1.4 million carats for financial year 2023. At Williamson in Tanzania, production was 26% higher than the previous quarter, this being driven by a 6% increase in tonnes treated and an 18% increase in grade mined at 7.7 carats per 100 tonnes. The first quarter of financial year 2022 is not a useful comparative, as the mine was in the process of being ramped up after having been on care and maintenance. At Koffiefontein, Petra has been exploring options for a responsible exit as Koffiefontein approaches the end of its mine plan. As we announced at the time of publishing our annual report, the sales process, which we announced in April 2022, has been unsuccessful in identifying a potential buyer, and Petra is exploring alternative options in close consultation with its stakeholders and in particular our workforce.